Good afternoon, everyone. It's my first time in Oslo, and I'm really thrilled to be here. I heard already so many exciting things this morning, and so I will try not to duplicate, and also perhaps to put a different perspective on a number of things that we heard this morning. So I can skip my first slide, because we heard, of course, how financial inclusion can meet so many sustainable development goals, which we, of course, all adhere to. Perhaps a different slide here is that we didn't talk too much about climate change so far. I think it's important because, of course, financial inclusion, it's about the unbanked. We know that we have still a number of percentage to fulfill and to meet. The question is, where are we going tomorrow? And I think this slide perfectly matches both things. How is population going to evolve, and how is climate change going to impact the different parts around the world? And what you see here, it's a slide that was presented by the IMF. With the color and with the size of the country, you see the impact, which is way worse in India and in large parts of Africa. So they will have way less possibilities to meet and to address the impacts of climate change. What we also know is that by 2050, half of the babies will be born in sub-Saharan Africa. So if you link those two elements, I think we know why financial inclusion is important, but even more, why it will be important to do everything we can to have not only financial inclusion, but also the economic growth, the development that goes hand in hand. So as I represent the banking industry worldwide, we heard a little bit about banks this morning, I thought indeed, why not choose four elements, 4 countries where we can learn something and where we can see what are the challenges, what are the benefits in each of those countries. And to start with India, we heard a lot about India already. The biometric system, that's Aadhaar, it has enrolled more than 1 billion Indian citizens with biometric iris scans, fingerprints, and so on. So one very important thing, if you want to go fast, if you want to be efficient in terms of financial inclusion, support from the government is essential. And that was the case in India. And that led, with the banks, and with the Indian banks, they opened 300 million accounts in a couple of years. We heard about Know Your Client procedure this morning, I think, with the Equity Bank. I'm afraid I'm not fully saying that Know Your Client is not important. I think we should be a little bit careful with that. As long as you are operating at a small scale in a country, and you know who you have, why not? Once that you have 1 million customers, once that you are systemic in a bank, once that you are a really big player in a country or a region or a sector, I think Know Your Client might be essential. Because you always operate with the money of someone, isn't it? So you'd better know who you are serving, etc. What was also a very important success factor in India was the benefits. So you couldn't have any benefit from the government unless you had an account, and that was also very important. So the banks negotiated with the government a relaxation of Know Your Client requirements, but it was not abolished. That's important. We also discussed this morning financial inclusion right, digital right, but first of all, you need power. So blackout is a problem. You need internet, another is potentially a problem. You need cheap mobile phones. And that's, of course, something that was available in India. So we talked about it. Access has improved a lot, and I think we could roll out further on in India, provided, of course, the digital consequences, but use is a problem. So if we open 300 million accounts, yes, but of all those accounts, at least 1/3 is not used. So what's in it? And it's the same. Mobile phone will be used, of course, because you can use a mobile phone for a lot of things. So I think what we can learn from that is you have to have a multiple use. The best is indeed to have a cooperation between banks, between fintechs, the government, of course, but the multi-use is always working better. Second example, China. We didn't talk too much about China, and I think it's very important. Why? Because in China, we saw the biggest evolution in terms of financial inclusion ever. And what was behind? Again, strong support of the government, very, very good performance on any of those elements that are important. The fintech technology, ATMs, point of sales, electronic payments, lending, and then what a number of you have said, the partnership between providers, government, banks, etc. So Alipay, you know it, WeChat Pay, so we talk together, 1 billion users for the one, 500 million users for the other. And they provide financial services, they provide payments. But there is a very strong cooperation also between Alipay and WeChat and banks. So it's actually a partnership. Why is this so important? Because China is not only important for China, it's also important for Africa. Because the Chinese investments in Africa are huge, not only in terms of infrastructure, in terms of mobile phones, and a lot of mobile phones in Africa are Chinese. It's about providers, it's about internet, it's about banking, it's about economy, it's about export. So what is important to know is that the Chinese model, as it exists in China, is an all-inclusive model. That means it's a data-driven society, artificial intelligence-driven society, where there is actually no privacy, no Chinese walls, even if we talk about Chinese walls, between the banks, the data of banks, government, Alipay, so all data can be linked. It's important to know. So privacy is an issue, and even in China, get the last mile right is a problem, but as the government is very committed to meet her own challenges, they are doing everything they can to roll out internet, to have mobile access for everything again, even in the most remote places, to offer education, to develop the economy, etc. Third example, South Africa. South Africa is actually an interesting example because in South Africa, the banking industry, the financial industry, the economy has been developing for quite a while now. So it's rather an example of how things can stall, how things can evolve and at a certain moment get more difficult to progress. And that's the example of South Africa. There are free banks account available, that's not a problem. There are mobile phones, internet. What you see in the latest months, unfortunately, is that you have huge blackouts. As the economy is doing badly, as there has been a lot of political instability, that has had a huge backlash on society. So it's not that you cannot access finance, it's not that you cannot have a free account, it's that the economy behind is looming and it's getting much more difficult to survive and to thrive in South Africa. I've been there many times. There are a lot of charities, there are a lot of public-private partnerships, but it's just a society that is struggling. And not only South Africa, also countries in the surrounding. And so there are free accounts, that's not a problem. My counterparts in South Africa told me the same as in India. It's not because you have an account that the person is getting rich, is going to develop its shop, etc., etc. It is an enabler, but it's not always sufficient. So the question is, what about a developed country? And I thought, why not talk about the United Kingdom? And Drew, indeed, you talked about regulation. And so in the United Kingdom, where you have nearly a full coverage, that's not a problem, you still have needs and you still have challenges of a developed economy. So multiple initiatives from banks and charities to really include everything. So that's more an inclusive society. So what you see in the United Kingdom, and you see it in other developed countries, is that the move to digital, even if you have a very mature economy, can pose risks or potential problems for the most vulnerable, and that is then the elderly, disabled, illiterate people, even in the UK. And then you have, for example, the illegal migration that is going on in the UK. So I had a conversation last week. So of course we are looking at official statistics, but you have a number of people in the UK who have no identity, so no bank account, because they are not supposed to be there. So they are living, they are surviving, they are doing better than in their home country. It's all relative, but that lady was paid half the minimum wage of the UK. So that means £50 a day for a full day, which was okay because her rent was £50 a week. But that was because there were 5 people in a room. When I grew up 55 years ago, in my family we were 7 kids, we were 5 kids in a room. So it's not that it's impossible, it's just that it does not correspond to what we find a decent living today for adults or for people who have a normal life. So just to give you an idea of what is happening. So there, we have been working lately in our organization to see move to cashless, move to digital around the world. What does it represent? Is it a good thing? Is it a bad thing? And it's a very important topic in the UK today. Move to cashless, move to digital, yes, but you have then to take into account what to do with elderly people, what to do with the disappearance of banks, because in the UK that's an issue, the banks are disappearing. If the banks are disappearing, no problem, but are there points of sales, are there ATMs, and can you still pay with cash everywhere? Digital identity is not yet available. And I would like to tell you a little anecdote of myself. So we have a nice lady working at our home. She's coming from Nepal. She's a really delightful lady. And we have I'm living in Belgium. And so we did a lot of efforts in Belgium to eradicate the informal economy, as might be the case in other countries. So you will have no cleaning lady unless it's fully in the formal economy. And that lady is working with that system, but she asked for weeks, for months, if it was not possible to still have an arrangement in the informal base, which I don't like, because of course it's better. So I had to be creative and find, how am I going to balance that idea and that really belief of her, coming from her country, that cash is always better, and it's better not to be in the system, trying to explain, yes, but if you really want to move on, it's better to have social security, etc., etc. So my creative solution with her was, okay, you're going to be paid just formal, I prefer to be like that, but I will give you a gift on top. And that will be a gift in cash. But I do not want to go back to that. But it is indeed a struggle. So it's not only moving to digital, what can you do, what can't you do, it's also about expectation, it's also about what is happening in that country. And so we talked a little bit about this this morning. Moving to digital means also becoming more transparent. Everything can be logged, so that is a challenge in itself. And if a lot of people in this room have great ideas, and I really encourage it to become very successful and have a huge number of customers and people, you will have to be accountable at the end of the day and be able to tell what money came in, what did you do with it, how, what is your own governance, who are your sponsors, who are your shareholders, what are you doing with the money, what about human trafficking, anti-money laundering, financing of weapons, what happened in your place, etc., etc. So last slide, it's really a slide I adore. It's from a guy, Hans Rosling, which is a Swedish guy. And if you really want to have just one shot trying to understand how countries are evolving, this is a great idea. It's all available on the web, Gapminder. So you see on one axis, it's the economic development, so how many GDP per capita, and then you have the lifespan. And lifespan is actually quite a good proxy of well-being of a country. And so you see the dramatic changes out of poverty have come from India and China. a lot of people, so it's the dot, moving from the left to the right. And if we want to eradicate poverty, those two countries will be essential. What you also see is South Africa. Such a little bit a sad story, because South Africa has been developing a lot, but with the lifespan, which is really not good compared to others, you have an issue. And then you have quite a number of countries at the left bottom side, so you will be able to see it on internet. It's a very interesting way to see where what is going well, so how are things moving, what is behind, what can we learn from those success stories. But with what I was saying in the beginning, beware, be careful. The baby boom coming by 2050 will be in Africa. Are we prepared for that? Climate change, are we prepared for that? And what can we do all together in this room to make this a success? Thank you.